Hello everyone. If you're preparing for an Accounts Payable BPO interview, one question is asked very frequently. Can you explain the difference between two-way, three-way, and four-way matching? Many candidates know the definitions, but they struggle to explain them with a practical example. In this video, I'll explain all three using one simple Indian company example so you'll never forget the difference. Let's get started. Let's use one example throughout this video. ABC Technologies in Chennai orders 10 Dell laptops from Tech World Solutions in Bengaluru. The purchase order says, quantity 10 laptops, price 50,000 each. The supplier delivers the laptops and sends an invoice. Now, before making payment, the accounts payable team must verify the invoice. Depending on the company's policy, they may use two-way, three-way, or four-way matching. Let's start with two-way matching. In two-way matching, only two documents are compared. Purchase order, supplier invoice. The AP team checks whether the item is correct, the quantity matches, the unit price is correct, the total invoice amount agrees with the purchase order. For example, the purchase order says 10 laptops at 50,000 each. The supplier invoice also says 10 laptops at 50,000 each. Everything matches, so the invoice can move for approval. Two-way matching is commonly used when the company doesn't require proof that the goods have been received before payment. Now let's look at three-way matching, which is the most common process in accounts payable. Here, three documents are compared. Purchase order, goods receipt note GRN, supplier invoice. Suppose the warehouse receives all 10 laptops and creates a goods receipt note. Now the AP team checks. Does the purchase order say 10 laptops? Did the warehouse actually receive 10 laptops? Does the invoice also charge for 10 laptops? If all three documents match, payment is approved. But imagine the supplier accidentally invoices for 12 laptops instead of 10. The purchase order says 10. The GRN says 10 received. The invoice says 12. Immediately, the system identifies a mismatch and the invoice is placed on hold until the issue is corrected. That's why three-way matching helps prevent overpayments and invoice errors. Finally, we have four-way matching. This includes everything in three-way matching, plus one additional document, the inspection report or quality inspection certificate. This process is mainly used for expensive machinery, medical equipment, electronics, or products where quality is very important. Suppose the company ordered 10 laptops. The warehouse receives all 10 laptops. But during inspection, 2 laptops are found to have damaged screens. The inspection report records that only 8 laptops passed the quality check. Even though the purchase order, GRN, and invoice may match, payment can be held until the supplier replaces the damaged laptops. This extra quality check protects the company from paying for defective goods. Here's the easiest way to remember it. Two-way matching compares the purchase order and invoice. Three-way matching compares the purchase order, goods receipt note, and invoice. Four-way matching compares the purchase order, goods receipt note, inspection report, and invoice. The more documents involved, the stronger the control before payment is released. If you explain it with a practical example like this in your BPO interview, you'll sound confident and professional. Thanks for watching, and best of luck with your accounts payable interview.